Well, hello everyone. Welcome to Trading a Smaller Account. This is a fresh new week in the markets. We are going to go out, have a quick look at what's going on with the major indices to get a feel for, is this a bullish day or a day where we're pulling back? And today we got to do a little housework. And when I first started trading, every Monday, I looked at every single position in my account. And we're going to talk about some of that, but it's important, if you are looking to trade to grow your account, or to generate income, that you treat your trading like a business, right? And businesses have routines, they have protocols and processes that they go through. And so today it's going to be 5 and 5. In fact, it's going to be maybe more like 10 and 7, but we're going to look at 5 of our current positions, and then we're going to look at 5 to 7 new positions. Okay. So, it's good to see all of you here, the usual suspects. It looks like several people attended the last in-person event of the year. So Ricebird and Will, I now know what you look like. So thank you for posing for pictures with one of our teams. So, that I now have a face to attach to the person that shows up in the chat every single day. That's really fantastic. And although I wish I could have been there, I'm really glad that you guys were there, and maybe we'll get a chance to meet next year. So delighted that, and I want to thank each and every one of you that helps bring this class to life by not only showing up, by participating in the chat. And if you have stumbled upon this class for the very first time, know that we meet every Monday and Friday at this time at high noon Eastern, and we are linking arms together to figure this stuff out. And I think this is a brilliant way to learn how to trade. And I have created the class that I would have wanted to attend when I found this education back in 2011. And we have been at this now for probably, I joined as a coach with a Schwab. I joined as a coach in 2016. And I think I've been teaching this class now for about 5 years. So, and a lot of you have been with me for a good part of that. So, to those of you that are new, welcome. And to the usual suspects who show up every week, thank you for bringing this class to life. Okay, so let's get right down to business. If you are not following me on X, you're missing out. Consider this my invitation. My Twitter or X handle is Barb Armstrong CS. Connie is also with us in the chat today. She's a friend and fellow coach, and she understands all these strategies that we're going to be talking about today. And we're going to be talking about several. We're going to be talking about buy right covered calls, long call verticals, and short put verticals. So this is a class where we move very quickly, and we cover a lot of ground. And it's my expectation or assumption that you understand these trading strategies. If you don't, I will put a link in at, it may be a bit like drinking out of a fire hose, but I will put a link into the Getting Started with Options series where all of these are covered in detail. Okay. So let's just refresh ourselves and then get right down to business. Know that options carry a high level of risk and aren't suitable for all investors. We do both stock and option trades in this class. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn. And to become familiar with the platform. And it also, it's a great way to make sure that you understand a trading strategy before you take the risk of trading it in your live account, and that you understand both the platform, you have a trading plan in place, you know when you're going to get out, both if the trade works for you or goes against you. And know that there are some nuances or differences. One is that short options will never be assigned early in paper money. That can happen in a live account. And so we get to talk about it, but we don't get to see that happen in a paper money account. Okay, we started last November 1st with $20,000. We usually start at the beginning of January, but we started last November 1st. I will reset this account probably to 25,000 come January, and then our max position size 5,000 if we're buying stock. And our max risk per trade is in that area of $500. Our focus in this class is typically on the short to intermediate term time frame. We're looking at, what I like to call a base hit strategy, where we're looking to get in, make a little money, and get out, and do that over and over again. Now, have we had losing trades in this class? Tons of them. But and this year, the majority of our trades have been bullish because the market has been so bullish. But there was one year, and prior to this year, it was our most successful year ever. Was the year the market was tanking, and we did a lot of short-term bearish trades, and a lot of our accounts sat in cash for most of the year. But we did a lot of short-term trades, and that continues. Okay, so let us go to the thinkorswim platform. And currently our account is sitting at 42,000. And, like I said, we've had a lot of winners, obviously, if the account is up over 100%. Now, is this typical? Yeah, no, we've never done that. This has been our best. Well, and we also, typically reset after 12 months, and this will have been, 13 and a half months, but it's been absolutely extraordinary. And yet we have a lot of losing positions in our account right now, and a lot of winning positions, and that is not unusual. And the trick is to manage both the winners, and more importantly, to manage something if it's not going your way. To admit that quickly it is something that sometimes traders struggle with, because it means you were wrong. But you're better to admit when you're wrong quickly than to wait it out and start trading on hope, which is a four-letter word, as I like to say, in the world of trading. And so the S&P 500 hit a new all-time high last December 6th. So just over a week ago, and we're within a stone's throw of it. And, and moving up again today, up 27% this year, which is way more than the average in a year for the NASDAQ. I think it's around 11% on average over the last 50 years. And then when we come and we look at the NASDAQ, it is hitting a new all-time high today, and it's up almost 31% on the year, which is, again, like way more than it typically is. Like over the last 30 years, I think the average, and you can go out and Google it, but I think the average has been around 13% for this index over the last 30 years. So to be up over 30% is quite something, and hitting a new all-time high today. And so, if I take this out to our year to date, hard to look at that and call it anything other than bullish. So 2 wins, 2 for the bulls. How about the Dow? Well, the Dow's been pulling back for the last couple of weeks, but it's still, and it's broken this, here was a previous high, it's gone below that. It's still flirting with the 30-day moving average, and it's done that a lot over the last year. So, Chicken Little isn't doing warm-up laps or anything, but this index up 16% year to date. One might say a very short-term pullback, short-term downtrending, but overall, this index has been uptrending, right? Right. Okay, so that's the Dow, and the last of the 4, which is our small caps. We have a bullish engulfing candle pattern here, and it, like the Dow, was kind of pulling back, but looks like it may be finding its mojo. It's up 16.5% year to date, so that's pretty bullish. But we've had a lot more kind of ups and downs in this index than we have in, say, the S&P and the NASDAQ. But yeah, overall uptrending. And then when we look at our volatility index, it's still down under 15. And I drew a line here at 15. So this is at the lower end of the range, especially in the last 6 months. Where from July through really the end of November, it was up above that 15 level. So that shows a pretty, high degree of confidence, right? Right. Okay. And then, who's leading the pack? Well, when we look at healthcare, it seems to have a walk on last place of late, but we've got consumer discretionary, which is hitting a new all-time high today. Communications within a stone's throw of the all-time high, which it hit last Wednesday. And technology hit a new all-time high intraday on Friday. And, it's pretty close. And then we have the financial sector, but, it's been kind of pulling back. And has it kind of reached, it seems to have reached this support level. And question is, will it hold? Now, in the last month, who's been leading the pack? Consumer discretionary, we already talked about. Communications, we already talked about. But consumer staples is all of a sudden kind of coming into the fold. And, it too close to this all-time high. Within, could be setting up a bit of a cup and handle pattern here. And then technology, of course, continues to be strong. Okay. So there we have it. Now, let's go back and forth between the old and the new, right? Or the current, shall we say, in our example trading plans. Because if you come here, we have got 28 working orders, which means we probably have about 28 trades on. And one thing that we've spent a lot of time looking at is the, short call, short put verticals and the long call verticals. So when we look at these, the question one might ask is, are we close to 80% on any of these? And the answer is not really. We're at 50, 50, 40, 40. All are in the green except for Goldman Sachs, which is losing steam still today. So if we come and we look at Goldman Sachs, well, it's come down to this support level. Now, this expires, let me go to a shorter time frame. This expires December 27th. So it's just come down and we position size for max loss, but now it's, we're below our short strike. So we could be assigned. And if we're assigned, we don't even have $59,000 to buy it. So what would we do were we assigned at this moment? Well, what we would do is, because 50, 590, 585, we're through both strikes, we would then exercise the buy side of this, which gives us the right to buy the stock at 585. It gives us the right to sell the stock at 585. So if it were assigned to us at 590, we'd go in and exercise our right to sell it at 585. It's trading at 581, and we would be out of the trade and we would have our max loss. But, we still have 2 weeks to go. So if this comes down and bounces and we're hoping that this 575-ish level will act as a bit of a trampoline and that it will rebound and end up back above. Okay. And that's really the only one out of these, 1, 2, 3, 4, 5, 6, out of these 8 trades that we have to look at. Now, something that we haven't looked at a lot lately is our stocks. And so we have this position on G, which pays a dividend, which is why we added it to our account. Now, one thing about dividends, this is one of the differences between a paper money account and a live account, is that paper money doesn't actually get paid a dividend. But we said, well, if this were a live account, maybe we might want to add a stock that paid a dividend. And so we picked this one, and then it gapped to the upside, and then it's been kind of consolidating. Now, this, we don't have a stop on it because when you'll see there's no little chiclet here. So when we did this trade, we bought a put for protection, and we bought it further out to cover us over earnings, and then it gapped up. So it will expire on Friday, but maybe it's time to add a stop. And so if we look at this and we say, well, we got in here, it gapped up. If we look at this recent low around this 43.84, we say, hey, if it goes 3% below that, we would want to exit the position. So we're going to come back to our monitor tab. We're going to right click on this, create a closing order with a stop to say, hey, and I'm going to take that 43.44 or 43.84 and multiply that by 0.97, which gives me 42.52. So we're going to add a stop to that. And we're going to make that good till canceled. Somebody's saying, how do we ensure we don't give back profits on those trades where we're up 40 and 45%? I think you're talking about the short put verticals. So if we come back to those for just a sec, so we've now added a stop. We can see we've got a chiclet here. So here's our short put verticals. So if we see a situation here like Microsoft, where we're up by 56%, but we can see we've given back a little bit today. So maybe volatility is rising on this, or maybe it's pulling back. So if we come back, we see, oh, it's pulling back a little bit. But here's where our strikes are at 435 and 430. And so, and when we look at this, we had this double bottom pattern, about a 34-point spread in the range. So we're expecting this to go from 440, up maybe another $35. And this candle pattern today is saying, hey, this pullback may be complete. And so we're just going to monitor these. We're going to look at these daily. And that's, how we ensure that we don't snatch defeat from the jaws of victory. Okay. So there's our short verticals and our stocks with dividends. Now we have two positions where we bought stocks for growth. One, because we had more money in the account than we often do, and so we bought a $5,000 position on both. Actually, GoDaddy, we have been up so dramatically on this. It's up 45%. I think we had 40 or 45 shares, and we sold some of the position because the position size got so big. And so we've had already taken some profit off the table. And so you might say, well, we're at 5,600, the max position size is supposed to be 5,000. Maybe we should sell a few more shares and just to keep that position size around 5,000. And so if you said, well, if I had $652, and I divided that by the current price of 144, I could sell another 5 shares. And so if we wanted to do that, we could, or we could say, well, we're going to end up resetting the account, but that is kind of part of your overall account maintenance because we haven't changed our position size, and if we come back here and we look at GoDaddy, well, we've been doing some short-term trading on it. We'd have to go back maybe, 150 days. Oops. So here we sold 8 shares. So we cut our position back a bit. And the reason for that was to harvest some of the profit and turn it from an unrealized to a realized gain. And then to get our position size back closer to 5,000. So if you want to see how we would do that, we're going to come to GoDaddy and we are going to cancel this stop, which is at 162.77. We were going to move our stop up anyway. And if you want to see where your stops are, cancel. Okay. So we've just canceled this. And so now you see no chiclet. And so now we're going to come in here and create a closing order to sell. And we're not going to sell all of it. We're just going to sell 5 shares. Okay, confirm and send. We want to sell 5, send. Okay, now once that fills, and that has filled, we've sold our 5 shares. And so we've realized that gain. Now we might want to come in and add a stop. Now we hadn't updated our stop. Our stop was at 162.77. So it was below here. The last time we updated it was after it broke out. We bought it back here. And so now we might look at that if we said, okay, well, if we even use the 30-day moving average at this 193.48 and we put our stop below that, it would be around 187. So it gives it lots of room to move without risking, but it puts a net in place. Now, there isn't a guarantee with a stop that we're going to get out at the price requested. But our last stop, like I said, was at 162. So it was down here. So we're moving our stop up by $25 a share. Okay, so we're going to come back to the monitor tab. We are going to right click, create a closing order with a stop. And we're going to put this at 187.45. Now, some might say, are you insane? Like, why are you giving it so much room? Because we want to stay in the trade. And if we come out and look at this, like out to January, the odds of it going down to 185, it's, only a 13% chance of it touching 185 and triggering a stop. But if we made our stop, if it's at 208 and we said, well, we want to make our stop at 200, between now and January 17th, we've got a 54% chance of it coming down and hitting the 200. Yeah. Somebody's saying, like, I like 200. Well, you've just taken your risk of being stopped out and tripled it. And so if you're still bullish on it, and you might say, you know what, I've made my money. I want to take the kids to Disneyland. I want to spend Christmas in Paris, like whatever. I've got some credit card bills to pay. I want to take this gain and turn it into a realized gain. Totally legit. Okay. So we have now looked at 8, 10 positions. And we have done some trade management. So now let's go look at some new opportunities. Okay. Are we cool with that? Okay. First one, little company you may have heard of, Amazon. So Amazon. So, often I will draw the lines on the chart. So we had a short put vertical that doesn't expire till December 27th. And, are we still in that? So if we come to our short put verticals, no Amazon trade. So we're out of that. So if you were following along in your paper money, we do a lot of, here's our trade on Amazon. We did a short put vertical and we got out. Our goal is typically to try and make 80% of our max gain. And it looks like we achieved that. But now, so we can take this line off our chart, but could we say, hey, we have recent support here around 225. Could we, do a wash, rinse, repeat? So could we come to the trade tab and could we come out to, and if you look at our example trading plan, we want to have 1 million shares a day or more. Have we got that? Yep. Check. Have we got lots of volume? Check. Have we got a tight bid-ask spread? Check. Now we could come out here, which is 32 days, or could we, and we're looking on the put side, so we have lots of volume over here too. What if we looked at a weekly and went out 25 days? Well, we still have, over 1,000 contracts and, or hundreds of contracts. And if we did the, 225, that's a 20-cent bid-ask spread, a 6-cent bid-ask spread. So that's acceptable. Could we do the 225 and the 220? we get $1.32. And so when we look at this and our analysis says, okay, if we can make $1.32, what are we risking? Well, $5 minus $1.32, which I think is $1.68. You math guys, verify that for me. Oops. Yeah. $1.31 divided by 360. I put in 169. So that's a 35% potential return for a trade we'd be in for 25 days. So if we're okay with that, and we are, because it's more than 25%, we're going to take our single order, make it our first trigger sequence. Now we are risking $360 some dollars. So we're only going to do one because we don't want to risk more than 500. And we're going to say, hey, when this is worth $26, buy it back. Okay. And some would argue that short put verticals are more neutral to bullish, right? Because as long as this stays above 225, it's at 230.63. So we have over $5 worth of wiggle room. You know, we're good to go. If we do a long call vertical, it depends on where we put our strikes. Like if we did a 230, 235, then it has to move up by $5 a share. But could we come out to say this January 17th, or even this current one where we've got thousands of contracts, and do the 225, 230? So it's already through both strikes. Well, 225, 230, we'd have to pay $3 for that. So as long as it stays at 230 or above, we're good to go. And so, you know, it's kind of modestly bullish. The short put vertical has to stay above 225. The long call vertical has to stay above 230, but it's already above 230. And so it's kind of, it's modestly bullish. Okay. Okay. So, and we're going to do one where it's through both strikes, and then I'm going to go out a week and we're going to do one that's, and we can compare the two. So first trigger sequence, if this goes to 450, which is a 50% gain, which is our example trading plan, then we'll take the money and run. And again, we're paying $3, so we're only going to do one. And we're going to put that in our long call vertical group. And then we're going to compare to the out of the money target on January 17th. So what do I mean by that? So we're going to come out now to January 17th. And I know this annoys the living tar out of some people because they're saying like, hey, you know, why don't you just tell us which one is best? It's like, because we're in a class and we're trying to learn here. And might some traders put on both a short put vertical and a long call vertical? They might. You know, and if we look at this 230 to 235, what might the advantage be to doing this? Well, one would assume we're going to pay less to get in. Well, we're paying 235. So when we come to confirm and send, you know, we're risking 235. We could lose the entire amount. But here's this, we could make over 100%. Now, our goal is to make 50. So might we hit the 50 earlier if in fact it goes up? Because we're saying like, hey, we're willing to get out. If we can make 50%, we get out at 350, 360 and leave 140 on the table. And you know what? Be happy to do so. And, you know, when we look at this and we say, okay, what's one of the other advantages is because this is 235, you know, or 240, we can afford to do two contracts on this, where the other one was 300, so we could only do one. You know, and so this has to get up, the other one has to get closer to max gain. So we're going to come here and I've already got this up. So we're going to do two contracts, single order, first trigger sequence, right click, create an opposite order, and we're going to make this 360. And then we can compare them and see how they worked out. And if the trading gods are upon us, maybe they'll get us out before the end of the year so we can actually complete our comparison and hopefully out for a gain. So compare to the in the money strike trade. And these little notes I'm putting in, this is just a note from us to us, right? Okay, so we have now done 3 trades on Amazon. So 2 long call vertical trades, one with a January 10th expiration, so 25 days out, one that's 32 days out, and then a short put vertical, okay? Okay, so let's look at another one. Let's look at another stock. So I'm talking about the big boys today. So how about we look at Netflix? So does this chart kind of look similar? Now, I see we've got earnings coming up. So January 21st. So that's after the monthly expiration. But, you know, could we sell a short put vertical? And then you might say, hey, you have a bunch of trades on. Do you have a short put vertical on Netflix already? So if we come here, we do. So we're not going to do another one. Could we do a long call vertical? Do we have a long call vertical trade on Netflix? We do not. Okay, so we're going to come to Netflix and say, hey, this is trading at 922. We can't afford to buy a call. Like if we come to the trade tab, you know, and we look out here, this, you know, these are $25, $27. Like we can't risk more than 500, maybe 550. So a long call is out of our snack bracket, but could we do a long call vertical? And we could do the 920, 925. Now we're thinking, you know, it could do some consolidating. Maybe we want to give it a little more time. So, you know, if we're in that 20 to 50 day range, we still want to be out prior to earnings, and January 17th will get us there. So we're going to buy a vertical, 920, 925, 263. So that'd be 260. We'd want out at 390. First trigger sequence. We're going to do 2 of these. Right click, opposite order. We're live in the market. So this would be 375. Good till canceled. Confirm and send. Long call vertical. And we can compare this to the short put vertical that I think we put on last week. So how much could we lose? $500. How much could we make? 500. And we're saying, hey, if we can make half that, we're happy campers. We're, you know, because when I first started with these, I thought, like, if I could make 100%, I want to make the whole 100%. And, you know, I very seldom did. And so I hated these long verticals for that reason, because I'd snatch defeat from the jaws of victory over and over and over again, because I'd be up 30, 40, 50, 60, 70%. And then I'd give it back and I'd be down to a 50%, 40%, 30%, 20%. Oh, and now I'm losing. And so I thought, well, what if I change my goal? And so if you are new to all of this, one of the things that you may want to do, and I'm going to bring this up, is come to Trader Talks. And here's my segue, you know, to say, hey, if you haven't subscribed to this channel, it's free. It's another free resource. When you first get here, it will show you whatever you is currently playing, like webcast that's being taught. If you come to playlists, and I'm going to create some more of these over the holiday when we're dark. So no live webcasts between Christmas and New Year's, guys. And then when you come back, there will be a new schedule. So you'll want to check that out as well. But so here's the example trading plan for short put verticals. Here's an example trading plan for long call verticals. And, you know, and we kind of go through it. This isn't the only, you know, this isn't the IG of trading plans. It's just a framework from which you can create your own trading plan. And with the long verticals, we're saying we want to get out if we're up 50% or down 50%. Okay. And that doesn't mean if you're up 40% that you can't look at it and say, hey, it looks like it's going to start pulling back. 40% looks pretty good to me. I think I'll take it. Yeah. And so that's where you can hit those. And then I do these post-mortems sometimes, like I'll compare, like here we had one stock, 4 trades. And I have been asked, like, what stock, what was this? I think this one might have been GM. One of them was 3 bullish trades. I think that was Lulu. But I do say right at the beginning of the class, because they don't want me putting ticker symbols in, I do say which stock it was that we were comparing. So, we just kind of go through how to calculate your return on risk and all that kind of stuff. And then I've done a bunch of short videos on Thinkorswim. And somebody had just asked me for a reminder on how to use scans to create sector watch lists. So if you're wondering about that, just go ahead. Somebody's saying, do you use stop losses? And yeah, so coming back to our regular programming here, with stop losses, I don't on a long call vertical. And why not? Because we have stop losses on all our stock positions, and we have exits in place to exit when we have our profit. So here's all our long call verticals. And this is what we want to look at. Are we up close to 50% on anything? And this thing that we're up, like this Mara, is it bullish today or bearish? And so we're up 33%, but it's moving to the upside. I think these we just put on Friday. And so we're going to just kind of let that go. Okay. Now, Starbucks, we're down 97%. And here's, and we're down so far, it expires Friday. So why didn't we exit at 50%? And this is where that 4-letter word called hope starts coming in, because on Friday we looked at this and we said, hey, it's come down to this support level and it could bounce. And so we position size based on max loss. And so we're going to wait and see if it bounces, because sometimes when you stay in these trades, and I've had people, in the comments on a survey, and there is a survey today, by the way, say hey, Barb, you said to get out when we're down 50%, and I did, and you didn't in this paper money account. And then it rallied and you ended up out for a profit. And so, yeah, when you start trading, we made an informed decision on Friday to stay in this, hoping, or based on this candle pattern with the expectation that it might bounce and our loss might be less, and didn't go our way. So, had we been out at 50%, that would have been better. But the reason we don't put stops on these is that when the market first opens, sometimes there can be a lot of volatility. And what I have seen sometimes in my live account is I've seen me get stopped out for way more than a 50% loss. And then the market settles down and I wouldn't have been out at all. And so instead, we're doing this daily monitoring, because I'm not just trying to go with what paper money has to offer, but to give you kind of real life application. And in this case, yeah, this didn't work so well. Okay. Okay. So I hope that answers that question. Okay. So by the way, I had somebody ask where to see, get the journal. So if I come back on this, this is another thing you'll want to, have as a favorite. You go to schwab.com/coaching and then come to the live webcast. Come January, there's going to be a whole new, schedule. And a lot of the classes won't have changed. My schedule's changing pretty dramatically. But if you want to access to answer the first question, where do you get to the journal? If you click on today's class, you'll see under resources this, trading journal framework that you could use. Yeah. Yep. Yeah. We don't, somebody said you should have closed that trade out on the 25th. You're right. Yeah. Um, Generally speaking, does the 50% loss exit take into consideration our win-loss ratio? I don't have a win-loss ratio per se. And I haven't tracked our win-loss ratio by trading strategy, but I would suggest that that's a really powerful thing to do, because I can guarantee you, and this is one of the things I talk about in the Getting Started with Options series, the 7 things I wish I had known. And if you've never watched that, I'd highly encourage you to go check that out. And that is, if you come to, and Getting Started with Options is down close to the bottom. I'll put a link into this whole series. But if we come down to week 12, the 7 things I wish I had known, I talk about treating your trading like a business. And if you owned a Starbucks franchise, you would definitely know how much of your profit comes from cold drinks versus hot drinks, versus the food items in the case versus the hard goods that you sell. And you'd be analyzing that. And so if you're not doing that with your own personal trading, then it's more difficult to make an informed decision. Now, have on average, we've done okay. Well, the account is up over 100%. But how much of that has come from long call verticals? Because I haven't tracked it, I can't tell. I can't tell you what that win-loss ratio is. And I can't tell you what the win-loss ratio is on short put verticals either. And that would be really nice to know, wouldn't it? And so in your live account, we have a new year coming up. Maybe that's something you want to take advantage of, come the new year. And then just while we're here, so if you come up here, and I've also posted this on X. And so, this is kind of why X, I think, is such a great resource. So if you want to see what classes I'm teaching in the new year come January, you can see I'm going to be teaching every day. And I'm trading Cameron May. He's going to start teaching Getting Started with Options. I'm going to be covering Getting Started with Technical Analysis. And given I've had a long-term love affair with charting, I'm kind of excited about that. We'll still do Trading a Smaller Account Mondays and Fridays. And then there are 5 new classes coming, and I'm going to be teaching 2 of them, trading price patterns and after hours trading, which is like if you have a JOB and would like to be able to look at things after the market closes, and both trading price patterns and after hours trading, it's not just short-term trades. It's with one account, we're going to pretend we've inherited $1 million, and how might we use both after hours trading and trading price patterns to build a portfolio, along with maybe taking advantage of some short-term trading strategies. Okay. So I'll treat it it's kind of sort of like a companion class to Trading a Smaller Account, but that will only be a piece of it. The bigger part will be, this, how to build a portfolio as well. So there will be 2 components to it. And both of these will include both stocks and options. So just if you're wondering what these are about, there's also going to be a new class on trading indexes, index options. So I think that's going to be exciting. So there's lots of new stuff coming up, and go to X, because I've posted all that stuff there. Okay, so we didn't get, and our 45 minutes, it comes and goes so dang fast. So we didn't get to look at Microsoft today, and we were going to, I had a potential trade teed up for that, to do a long call vertical on Microsoft. I think we already have a short put vertical on it, or NTAP, NETAP, which, that is a bit of a Tums chart. But, for those who, fortune favors the brave, right? Or we could have looked at Walmart, perhaps, or, Monster, which, we looked at the other day and we said, we're being patient, we're waiting for a breakout. And now we're here, but, this stock is up 583%. Kind of insane, right? But you know what? Lots of opportunities still this week. We have a full week, and yeah, so there we go. So that's a wrap for today. On Friday, we'll look at our buy right positions. Okay. And because we have several of those on where we both bought the stock and sold a covered call, we didn't get to those today. So here's what I ask as we close up. Please hit the like button. It lets Connie and I know that you found this content valuable. And it also raises this webcast in the YouTube algorithm so that more people can find it. I like to say it's your chance to do a favor for a random stranger without even leaving your house. So hit the like button, subscribe to the channel if you haven't done that already. Follow Connie and I on X, Connie Hill CS, Barb Armstrong CS. Connie does this post every day. It's so cool, like market movers. I should have gone and looked at that before, class today. It's a great resource. So you'll want to, check that out. And then there's a survey in the chat. So here's the deal with the survey. If you promise to fill it out, I promise to look at each and every comment. There are two questions. Your two questions. One was, I hated it. 10 was, I loved it, and I'm going to keep coming back, and everything in between. And then you can type comments in. So let me know what you'd like us to talk about in the upcoming weeks. Are there trade strategies I haven't talked about in a while that you'd like to see? Is the pace okay? All that kind of stuff. So here's your chance to have a voice. Guys, thanks for joining me. Have a great day. Bye for now.